Good morning. Welcome back to another episode of Pre-Market Prep. And today is the day that a lot of traders have been waiting for. NVIDIA's earnings coming after the close will be make or break, especially for the tech side of the market. Of course, looks like tech going to be sliding for the second day in a row. We're not used to that in 2024's market. Didn't know that we're allowed to go down 2 days in a row. We'll be talking to Martha Stokes today, talking some Palo Alto Networks earnings. Let's go ahead and get the show started. Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, let's go ahead and run through the major indices before I bring my man Dennis on. The Qs, like I said, trading down again this morning after closing down almost a full percent yesterday. Go over to the SPY, also trading a little bit lower this morning. Dow Industrial Average, everything in the red, even Bitcoin trading off a little bit. Let's bring my man Dennis on. Dennis, how we doing this morning?
We're doing pretty good. We're looking at a pullback. I know we didn't go you add me, I add you, go back and forth here. I think I'll just add myself here going forward, then we won't get crossed up. So
there you go.
I'm hiding in the background. When you give me the cue, I'll add me.
Beautiful. Love it.
Yeah. What a day and what a night for earnings. Huge tech movers. And I mean something fierce here. Let's start with the big daddy from last night, which is having one of its worst days ever here today. Palo Alto Networks down $87 now. The Momo trade coming off fiercely here. AB, talk to me about this earnings report.
Yeah, I mean, you just hold on, I'm waiting for this to refresh real quick in here. With Palo Alto, I mean, we talked about how some of these expectations, again, bar just set very high for basically everything in this space. All right, hold on. Let me go ahead and pull these numbers up.
I've got them in front of me. I got your back here. So we'll just go to Palo Alto Networks. I'll read. He's going to work on the charts here because he's got a little spinning action going on there. Yeah. $1.46 versus $1.30 was a beat on the bottom line. Top line beat as well. 1.98 billion versus 1.97 billion. Guidance just slightly light. And when you're a Momo company with a 50 PE or 55 PE, you can't have light guidance. $1.24 to $1.26 for Q3. Analyst estimates were up at $1.29. Revenue guidance for Q3 also light, 1.95 billion versus to 1.98 billion versus analyst estimates of 2.04 billion. Full year, they're still seeing that they're going to hit 545 to 555. Estimates around 551. But again, that's not a blowaway. Even if it's in line on that guidance, it's not good enough when you've got a PE of 55 or 60. That PE coming in rapidly here today because the stock has fallen so far. I was just doing the calculation before I started the pre-market show. PE now, if they do hit that 555 target, is only 50 on PANW, which is as low as it's been for a while. Now, still, the PE is still 50. So I don't know, like if the growth slows a little bit here, is it worth 50? That's the question. That's what question the market's asking. But wow, if you were looking for a dip to buy Palo Alto Networks, you got your wish.
All right, we do got the Benzinga Pro up now. What right now, Dennis, would you say are like the biggest stocks moving with this report on Palo Alto this morning?
All the cybersecurity stocks are getting hammered here. So we'll do the technicals. We'll just go through them like Fortinet, wherever you want to go. Fortinet, CyberArk. You could go Sentinel-1 is really getting hit because Sentinel-1 has really had a move. There's just a pile of them. If you want to just look at the ETF, Hack, CrowdStrike getting just kicked in here this morning. That's a big fall for CrowdStrike, down 9.6%. Again, all these stocks got lofty PEs, so you don't want to see inline earnings or slight misses. That's just not going to do it. This Momo trade, just talk the overall market here for a second, was coming unwound yesterday. It started with SMCI on Friday. Then it spilled over to all the Momo stocks. We talked on the show even about Lilly being the potential for, coming back down. Well, that has happened here because obviously Momo stock as well opened right at the highs. If you shorted the open, you basically took no heat. Sold off 45 points. It's got another downgrade. We'll get to that in a second. But just talking overall Momo trade in 2 days, went from bliss to that PISS word. So not looking that great if you're long all these Momo stocks. With that being said, AB, you're a young guy. Do you look at Palo Alto Networks and think, well, hacks aren't going away. We're going to need cybersecurity probably for the rest of our lives here. Do you look at Palo Alto Networks as a leader in the space and say, I'm willing to pay a PE of 50 for this thing because I think they're going to grow earnings over time? Thoughts, concerns, AB?
Yeah, I mean, so like you said, I mean, over time, and especially with we were talking about this with Chaikin, the more and more companies are moving toward integrating AI and stuff like that into the workflow. I think there's going to be more and more need for good cybersecurity. And over time, I do think this industry will just continue to grow. So any of these names, whether you're talking about Fortinet, Palo Alto, like I could get talked into holding long term. I guess one of my big concerns with this, Dennis, would be that why wouldn't, the biggest tech players, Microsoft, et cetera, why wouldn't they also be a good cybersecurity play? I don't know if Microsoft hires, some of these cybersecurity companies, but when you're talking about how many companies use, say, Microsoft Office or Microsoft Teams, like obviously you want that stuff to be secure. You don't want corporate secrets, companies getting hacked, stuff like this. But again, the more and more companies move toward AI and stuff like this, I think there will be more demand for cybersecurity. So long term, I think basically anything in this space, I wouldn't mind holding. I don't have a edge in saying, okay, I like Fortinet more than Palo Alto right now.
Yeah.
Anything like that. You can see this morning, you got a lot of downgrades coming in on Palo Alto. Rosenblatt lowers the price target to 265. That's coming after some really bullish price targets from Rosenblatt the last few days. Loop Capital downgrades Palo Alto to hold, announces $300 price target. So again, I mean, when we talked about Chaikin with this, that kind of the cybersecurity plays or IT plays could be kind of these auxiliary plays for the AI trade. I don't think that story is going away, but again, I don't have an edge in terms of, hey, I love Palo Alto compared to Fortinet or whatever. I think the industry will be fine in the long run, though.
I think it's something, and a good point you're making is the the bars to entry here, like the barriers to entry. Like there's a lot of these cybersecurity stocks, and I don't cover the industry well enough to know how they differentiate from each other. So is there going to be more in the future? Are some of these companies, to your point, going to start doing cybersecurity on their own? Like Microsoft does do some stuff. Like, do they need, SentinelOne? Do they need Palo Alto? Do they need CrowdStrike, or will they figure it out on their own? I mean, there's all those things to consider. So it's not a slam dunk to just come in here and say, yeah, Palo Alto Network, cybersecurity, we're going to need that in the future. And, we're going to pay 50 times right now. We're going to make a lot of money with it. With that being said, good companies, buying good companies on dips, and Palo Alto has been one of the best, has been rewarded in the past. So if you're coming in here today, I won't argue with you. I won't say, like, well, what are you doing? This is, obviously a really disappointing quarter. I get it. Part of me I don't have any cybersecurity as my long-term portfolio of cybersecurity stocks. So part of me wants to join you and say, hey, Palo Alto Network's down 23% today. Sounds like, like that's the time to be coming in here. I think I wait until the dust settles a little bit, though. Again, to quote my friend Brian Shannon, buy the strength after the dip. Don't buy the initial dip, because sometimes those initial dips continue to fall. And, sometimes they bounce right back. But we've kind of turned. If we would have, Palo Alto Networks would report this last week when we were buying Momo stocks, it has a better tendency to bounce back. But the market has turned against Momo, at least, for the last couple of days. So it's a little bit of a tough day for it to report into. Good support down here, though. If we look at the charts, and let's do, maybe we can zoom into the early January. We're back to the January lows here. So we're just basically giving back this year's gains. So we're not going back like years and years of gains here. We're giving back this year's gains. The lows for this year back in January, 282, multiple lows at 282, 281. We're at 279. Can we get back up at 281 and hold that? Well, that's, if you're bullish a stock, that's what you want to see. You want to see that 281 hold. You don't want to see it start breaching that. Then you start thinking the stock could go to 250. But the stock is still expensive, and it just disappointed. Maybe I'm going to sit on the sidelines for a bit.
Yeah, and I mean, if you're coming in and trying to buy this dip, it probably depends on your time horizon. Because like you said, Dennis, sometimes these things snap right back after a big dip like this, but that's not really the, that's not what you see the most common. It usually moves a little bit lower from there. So like for me, if I was going to buy and hold this for 10 years, okay, maybe it wouldn't matter if I came in and bought it today and it keeps moving lower by another 5-10% and then turns around. But if you're going to try to, hold this for a swing trade for 2 weeks or whatever, then I wouldn't feel that convicted today that I'm going to buy it right here. And then all of a sudden it's going to bounce back in the next couple of days. Obviously, if NVIDIA blows it out of the water this afternoon and tech's back in favor and the Qs are up 3% tomorrow, then that's a different story because then people will probably feel a little bit better about buying the dip. But there's all this uncertainty right now. I do want to talk about the Momo trade. I mean, you mentioned it. We've been talking about SMCI a lot. Yesterday, the trading action, obviously, real ugly off the open. But if you look after the open, I mean, SMCI went from being down like 20% to only down 5% at one point. Were you watching SMCI yesterday? Were you trading it at all?
I had it on my screen nonstop. It was just, we went from buyer exhaustion on Friday morning, incredibly, to seller exhaustion on Tuesday afternoon, or Tuesday morning, really, I guess, because it bottomed on Tuesday morning.
So I've got the 5-minute chart right here. You can see. So right here where my cursor is where we opened at around 800 a share. The stock just sold off all the way down to, got below 700. And then that 700 level kind of acted as like a psychological, I guess, one of those round numbers. And it kind of bounced right off that 700. So you went from 800 at the open down below 700 by 11 o'clock. All the way back to 800 by, the close. So, I mean, it was just a crazy trading day for SMCI.
The stock lost 400 points in basically a little over one trading session, losing a lot of that on Friday and then Tuesday morning. So unbelievable pullback. That's, I didn't think it would pull back. I thought it was going to pull back significantly. I didn't think this would pull back that hard, that quick. The question is, where, I had multiple people reach out. Where are you rebuying SMCI? Again, I want to see some consolidation. I want to see some strength. I want to see the NVIDIA report. I don't want to dive in here and then they hammer NVIDIA and they hammer SMCI again here. So, which brings us to that, which we should talk about in a second. We can tie it in with the Vertiv report here as well, because Vertiv involved in data centers as well. I think on SMCI, I'm going to wait until I start to see some consolidation, though. I don't want to just be a hero and catch the falling knife, and that's what you were doing yesterday. And some people were rewarded, but I mean, the people who are the heroes, at 900, nope. 800, nope. The person that bought at 700, yes. So it's a little bit, just a guessing game on where these things are going to bounce. We can say, oh, it bounced at this moving average or this moving average. There's always a moving average something's bouncing at. So I don't give, a lot of credit to the people, oh, it's at this moving average. It's more just, where does the sellers wash out? We had a lot of people chasing it. We washed a lot of those out yesterday morning. Now, can it back and fill? Can it, have some consolidation here, start to hook and, did a little hook on the chart and start to look higher? That's where I get interested. But with NVIDIA looming large here tonight, hard to take a position SMCI ahead of that.
Yeah, I almost though, I know myself, and if I really loved SMCI here, which I'm not gonna do this, and I'm not saying, this is not financial advice. I don't think that this is how you should play it. But if I did love SMCI, Dennis, and really wanted to own it, I think I would buy a tiny bit today, just in the chance that NVIDIA crushes it, and then we're looking at SMCI up back to $1,000 tomorrow, and then I'd be like, oh my God, I missed it. So that way, if I at least take a tiny, little position on it today, and then say it moves lower tomorrow, then I can be like, okay, well now, I can get in at a lower cost basis and whatever. But I wouldn't want to, again, if I love this stock, wouldn't want to miss a big move that you could get with NVIDIA. But
I don't think it'll move. I think if NVIDIA blows it away, I think SMCI could gain 100 points. I don't see it gaining 250 points on an NVIDIA blow away. I just don't see it. And I do believe NVIDIA is going to blow it away. I'm just not sure, this market really hates Momo right now. I mean, it's a tough tape for NVIDIA to report in. Is the blowaway even enough? That's something to ask yourself as well. Let's tie this in with the Vertiv report, VRT.
Let me pull up.
A lot of people don't follow this company. Some people were calling it, the SMCI. This is where the next SMCI is going to be. They do cooling for data centers. So they are tied in with this whole AI movement here as well. Now, the question, was in the earnings report, are they going to SMCI? And a lot of people thought that they were going to come out and blow it away like SMCI. That did not happen. They beat, but they did not blow it away like SMCI. And that's why the stock is taking it on the chin here. Not a cheap stock either. Not crazy expensive, but not cheap. Give us that report here, AB.
Yep. So EPS came in at 56 cents. Like you said, a slight beat by the estimates of 53 cents. So 3-cent beat on the EPS. Sales 1.86, missed the $1.88 billion estimate. So missed by about $2 million there. But I mean, like, again, like you said, the expectations just for this, it's in the data cooling space. People are like, oh, cloud, data storage, AI. I mean, everything. It's like, it's all the buzzwords you want that we've been looking at all year this year. And so,
it's tied in here.
Yeah.
And a lot of people were saying, move from SMCI, move into Vertiv. And I really considered doing that, actually. But then I saw it reporting. I've day traded it a little bit, so I have been in this, trading it a bit. But I haven't really, went all in on this one here like I did on SMCI. Not that I went all in, but not, buying it in the long-term portfolio and holding and, thinking this is going to be the next SMCI. It might be. I've got to do more research on it maybe, and just see how much of their business is from AI potential and how much is other businesses. Analyzing all that's important too. But so far not so good for the VRT shareholders. This really washed out this morning, though. If you bring up that chart just from the overnight trading here, pre-market, this got all the way down to 48 bucks on this report. So they absolutely hammered this stock. It has bounced back off $7 off that low, so they have come in and bought the dip on this thing. But man, the algos really overshot here again, as they always seem to do, down to 48. I think I would be a buyer down there at 50. Like I did do, it's just a multiple calculation here. And this thing's only trading about 30 times earnings. So if you think this is a big AI play, maybe this is one you are looking to dip to buy on. I think if it got back down to 50, I'd be more interested here. But again, I think I want to do some more research.
Yeah,
I know Christian Fromhertz, like this company. I'm not sure if he doesn't like holding through the reports. I'm not sure he'll hold it through the report. But I trust Christian's research, and not that, this report wasn't that bad. It's just maybe the SMCI set the bar too high for BRT.
And it's similar, I feel like, to Palo Alto's chart when you look at it, that it's not like, this stock is down 30% and giving up, the last 6 months of gains. This could just be a little bit of the froth of okay, this ran up in the last 6 weeks with everything else, and now you're seeing that kind of pull back and retrace to maybe where it should have been trading at before all this kind of euphoria entered the market around these names. And if you're looking to get long these names and that's the case, then that's not necessarily the worst thing in the world. That, okay, now the stock's trading at a more reasonable valuations where the company is, and it's not tied up on all of this, oh my God, we just got to buy everything and anything related to AI. So I mean,
the AI short-term bubble has popped. I do believe that there's going to be a reinflation here, because I don't think this is a one and done. I think AI is real. I think 5 years from now, we're going to have AI in everything. I don't think, a lot of people think it's just chatbots. The chatbots suck. This is just another bubble that's burst, and now you don't have to look at it anymore. I don't think that's the case. I think it's going to be tied into a lot of things. I do think it could be like the internet was in 2000, tying everybody together, AI helping with so many different things, and humanoid aspect of it too. I mean, right now the humanoids are just doing kind of what they're told to do, but you give a little AI and they can think and do some stuff here. You start getting Terminator visions, but you try not to think about the negatives, just the positives. I think it's going to be huge. So I do think you want these companies on your shopping list. I think, the SMCI is going to be a buy at one point. I think the VRT is going to be a buy. I do believe if NVIDIA gets a dip, it's going to be a buy, but I don't know if I want to come in on buy on day one. I like to buy strength after, not catch the falling knife. It's just not my style.
Yeah, and I mean, the thing with the people speculating that this AI thing is just a bubble. Oh, it's like when everyone wanted to buy Web3 stocks, a couple years ago, and everyone was rushing out to try to, find their different Web3. I don't think it's the same, because you're already seeing, I mean, through NVIDIA's earnings, you're already seeing the effects of the new demand for AI and how much growth it's creating for the company. And obviously that's the one, NVIDIA is the one that people have been rushing to and been getting the most attention, rightfully so, because it's seen as the leader in this space. But again, in the last year, you can look at NVIDIA's earnings and see what a growth driver this has been. And we'll see tonight if that continues to be the case.
Well, let's go into it and just preview it here.
Well, I want to talk about, so in addition, we're obviously going to preview the earnings tonight, but I did want to kind of get your thoughts on yesterday's trading action on NVIDIA, because I mean, I was surprised to see at one point it down like 6% yesterday.
Yeah.
Do you think that is more investors like that you think the street's expecting this report to be underwhelming and people getting out ahead of it, or that some of this kind of, again, froth is just being taken out, and then now you're getting a more reasonable valuation into the report?
I think SMCI spooked everyone. I think, some investors held the SMCI and they were like, well, it's going to just bounce right back. And it didn't. And then it lost 40% in 24 hours. And that was the cue to take profits and all of this stuff. And that's what we have seen happen. It's basically profit taking. It isn't like, and maybe it's fear of going in the report. And I'm somewhat nervous going in the report. I still have my core position in NVIDIA. I had told you last, or a couple of weeks ago, I bought more at 610. I sold those extra shares that I had, I think around 690. But I have the core position, the original position that I bought at 405, and then I bought more at 505, I think it was, on the breakout. I have all those shares. I haven't sold any of those shares. When I bought those shares, I liked it for the long-term story. I said, even on this show, I think eventually NVIDIA is going to be $1,000 stock. The question, is, am I strong enough to hold through the report? Yeah, I think so. It's not like it's 100% of my position or even 10% of my portfolio. I'm always diversified. I think if I looked at NVIDIA, it might be 3 or 4% of my portfolio. It might be 5 because it's moved up quite a bit. I haven't fully analyzed it there of my investing portfolio. So it's, it's a chunk, a good chunk, and it would suck if the stock, misses and goes down 100 points. But I just think the story here is real. And I think that it might go down because it's reporting into a tough tape. It is, has been the thing with Palo Alto Networks, gives back the entire 2024 gain. So NVIDIA, to give back the entire 24 gain, would be down at $500. I don't think that's going to happen. I think the report is going to be good. It's a matter of, can it hit lofty expectations? I mean, Dan Nathan last night on CNBC, he was all prancing around because NVIDIA had its first down day and he's hated the stock all the way up. And, he commented that he thinks they might actually guide down for the quarter. I think that's absurd. I think that's just a bear that's just got too excited and now is just, spewing, nonsense. I very much don't think NVIDIA is going to guide down. I think NVIDIA is going to have good guidance. I think they're going to have a good report. It's a matter of, can we hit that super lofty expectations that are around it? Like everybody's expecting them to report like last quarter, where they really blow it away. I don't know if they can blow it away that much. So that's why I think you're seeing the profit taking into the report.
Yeah, and I've got some of the financials pulled up here in Benzinga Pro. So this is just total revenue per quarter. And if you look, so a couple quarters ago,
zoom in there. So people with me like the glasses, I gotta go like this.
Yeah. Okay. So a few quarters ago, 3 months ending in April of last year, they did about we'll call it 7 billion in this quarter. Then the next quarter they did 13 billion. So that basically that's an increase of basically 50% there. And then the quarter after that they did 18 billion. So they went from 7 to 13 to 18. So in order to maintain that growth, this number would basically have to come in at like 25 billion. And I mean, like, again, my point
in
with
the
AI
quarter.
In the quarter.
Yeah.
And someone in the chat was saying, like, where are you using AI right now? People aren't, it's not there yet. I'm not talking about me using AI. I'm not talking about Dennis using AI. I'm talking about companies, whether it's Microsoft, whoever, coming out and buying these NVIDIA chips for what it's wanting to do with AI in the future. That's what's driving these earnings for NVIDIA is, the other businesses buying these chips. And you can see that reflected. And again, here, I'll pull up the annual revenue right here. You can see, I mean, we were hovering around, I'll zoom in again, 21, 24, 26, 29. Okay, now boom, you get the AI trade, 29. Okay, it goes down one quarter to 28, 26, 25, now 32, 44. So you've seen in like 1 year this thing explode, almost double revenue, and that's all driven by this new demand for AI. So I'm not, people are like, oh, no one's really using ChatGPT. People are still using Google. Fine, sure, but either way, companies are buying these chips, and you can see that growth from NVIDIA. We'll see tonight if it can maintain that great.
I'm not going to have a trade into this report. I only have the long-term investment into this report, and I am up significantly in the long-term investment. 400 to 700 is nothing to like sneeze at. Now, again, I did add to it at 500, so I don't know what my percentage gain on there. It's probably like 45 or 50%. With the 500 add. So a lot of people are like, well, that's in 2 months. You should take that gain, and it's maybe prudent to take that gain. But I feel like that's still the story here. I don't want to be all out of AI. I just don't think it's like we've seen bubbles burst and then that's the end and you just forget about it. So I'm intending to hold the rest of my NVIDIA position through this report. I'm all out of SMCI. I have half of my AMD. So that's where I'm at from my original NASA. I still have my Amgen, which has just been a disaster. They came out and obviously the numbers, and they didn't talk about the drug in the report, and it's down here at this point in time, so it's not been good. But the NAS of the NASA, my original acronym, has done really, really well. Again, booked the gains in the SMCI, holding the majority of the NVIDIA position, holding half the AMD. That's where I'm at. I plan on staying there. I'm kind of comfortable there. If it goes down 100 points on the report, it's going to suck, but so be it. Would I rebuy, and add to it? Possibly, but not on day one.
Yeah, and I think, like, if you were super bullish, this time last week on NVIDIA into earnings, think they're going to blow it away. And now we've gotten these, 2 red days in a row. That's fallout from SMCI. I don't think that necessarily changes anything for NVIDIA. The expectations might be lowered a little bit. And NVIDIA went from like 750 to 680 in 2-3 trading days. So, that's a drawback of $70, nearly 10%. I think, if you were bullish this last week, then now you get it at a better price point. Well, why would you not be bullish now just because of a little shakeout?
It's a good point. And Spinner, making that point in the chat too, the bar came slightly down here. We were at all-time highs going to the report, and Palo's firing on all cylinders. But now we've seen Palo Alto kind of disappoint. The Vertiv report wasn't that great. People are like, oh, well, maybe the NVIDIA is not going to be that great. And they're hitting it this morning because of that. There's some nervous Nellies going into this report. Those nervous Nellies, could be disappointed that they sold if NVIDIA actually does blow it away and go higher. I'm not in the crystal ball business here. I think long-term NVIDIA is going to go higher. I think short-term, this is kind of a coin flip. I could see it going either way, but I don't think it's a slam dunk for the Bears that NVIDIA is just going to lose 100 points on this report.
But backing up, if you would have told me a week ago, Dennis, that we'd be talking today about, is the bar set too low for NVIDIA going into earnings? I would have said you're crazy. No, the bar's set way too high. But now that we're here, it seems
the bar is not as high as it was a week ago.
Right. You went from like on a pole vault, it being like the world record, it's got to break the record and jump higher than anyone's ever jumped before, to now, this is actually seems manageable. Right. It seems actually doable for NVIDIA to report some numbers that gets the market back excited about these names. And like you said, does that mean we're going to see SMCI up $250 more? No, probably not. But can NVIDIA, report a number that again gets people back buying the stock? I think so. I wouldn't be deterred again if you were bullish by, these couple down days that this thing is.
So the expected move, like Chad, if you've got, do you have the expected move?
I think it's about 11%, or it was like when I looked yesterday.
Yeah, I'll just go to the options. I can quickly figure it out. Options are obviously closed, but we can take the closing prices and figure it out. Stock closes 694. If I do the weekly options on 690, that's looking at $40 and $35. So about $75 if my air math is correct there. So
a little more than 10%. Yeah, like 11% right now.
Yeah, so that's about right. So $75. It's a big expected move here. So, if it went up $75, it would obviously be back up at all-time highs. And I think that's a bogey for it. If it blows it away, can it get up over the 746? Let's talk about, scenario analysis. They do blow it away. Algos rip it higher. Well, 75-point move on top of that would bring it right around. It depends where we go out here today. It was 681 and we still have the full trading day ahead. But let's say hypothetically it went out where it's at right now. That would put it up right around, the 750 area, near the all-time high. And then if it misses, the 600, which is a nice round number here. So that would be your range. If you're looking CC, obviously.
Great if it gets down to 600, if it gets down to 600, I'm buying that all day long.
You're gonna catch the falling knife. AB is ready to get his hands dirty, catch the falling knife. Put on some gloves
for the long term, because even if I buy it at 600 and it goes down to 500, I'm not gonna be selling. I'm gonna be like, okay, well, I'll buy more at 500 and hold it for 10 years.
That's like Warren Buffett. Now the whole thing is
exactly
the argument against the long term is, and I'll tell you the argument against the long term, talking against my book here, is pull forward, obviously, that these earnings, growth is not sustainable. But also the argument against the long term is that there's going to be competition coming from everywhere, from not only, the obvious AMD, but from, other places, from, Microsoft, from, companies making their own chips, doing their own thing. So that's the argument against the long term. Valuation, which is what, a lot of people, like I've said before, have been arguing against the long term. I don't believe NVIDIA as, the valuation is an issue. Potential for increased competition, that could be the issue for the long term. So just keep that in mind when you're paying PEs of 33, 34, 35. A lot of things have to go right. When you're paying PEs on PA&W of 50, a lot of things have to go right. When they don't, you see what happens. So it's set up kind of not great, but at the same time, I do believe in the story, and I do believe NVIDIA is going to go higher long term. So I am with you.
Yeah, and I don't disagree about the competition. In fact, you've already seen in the past few months, like some bigger companies, Google, I think, said they were going with AMD instead of NVIDIA on some like certain chips. But I think then the question is, do I think that this industry, the semiconductor overall industry, is going to grow enough to that you can withstand other competition coming in? And I think that answer is yes. And then I think that NVIDIA will still continue to be a leader. Maybe there won't be as much separation between NVIDIA and its closest competitors 5-10 years down the road. But I think at this point, if NVIDIA essentially like gave up its status as the leader in this space, then it would be a big mismanagement from their leadership team. Real quick, just I want to on kind of, I guess, like a trade idea.
Sure.
A few quarters ago, where my cursor is right here, when NVIDIA first had its like huge report with this AI boom last May, the stock was up 25%. So I thought that, okay, NVIDIA is going to blow it out of the water this quarter. Demand for its chips are way up. And I was looking at the options, trying to buy calls. And so this is for me, like with a smaller account. I'm not really doing a lot of spreads or selling. I'm more just like looking for, okay, can I buy some cheaper options and hope to hit a home run on them? They were way too expensive into the report, Dennis. So instead, I bought QQQ calls that expired the next day that were slightly cheaper. And then on NVIDIA's report, the Qs ended up like 2.5% that day. And I made a killing that day. So I might look for something similar today to be like, okay, well, if I think NVIDIA is going to blow it out of the water, then hopefully that means that gets other tech stocks, back in the green. And so maybe I might be looking at some QQQ calls that expire tomorrow that are, 2% above the break even. So that way, if there is a blowout and all these tech names are trading higher tomorrow, I can make some money on it without buying these options that are just ungodly expensive on NVIDIA.
Good point you're making here too, AB. And I would stay away. So if you're doing that strategy, stick with the Qs. Some people are like, I'm going to buy SPY options because NVIDIA blows it away. The S&P is going to really go. Just be careful, because you'll have a rotation happen. Believe me, if NVIDIA really blows it away, there's the possibility that IWM could actually get hit. S&P has some other stocks in there too. S&P is, still heavily weighted mega cap tech, but also has other things in there too. So I just, I'd stick with the tech trade. I think tomorrow or tonight and into tomorrow, obviously, as the dust settles from when the NVIDIA report, I think it's going to be more of an IWM versus NVIDIA. I wouldn't be surprised if the IWM goes in the opposite direction, complete opposite direction of NVIDIA. Like NVIDIA's, where let's just say hypothetically NVIDIA is up 100 points. I wouldn't be surprised the IWM is down on that. So just be careful with that. We've kind of seen this mega cap tech versus IWM. I think it could be even more pronounced tonight. So I think you're going to have some vicious rotation. If NVIDIA gets whacked, IWM might actually rally on that. So just keep that in mind. The rotations are wicked and they are real right now.
100%. I see Jay Rice in the chat saying buying YOLO calls on earnings is a losing strategy. 100%. Don't disagree, but I'm saying like I just kind of like to do this for fun sometimes. So I'll take a couple $100, buy some calls or puts. Not something I do with my like real portfolio.
Lottery tickets.
Yeah, they're lottery tickets, and it's fun when you get one right. And I mean, that one in May was like, oh my, it worked out. I even texted my friend and I was like, buy QQQ calls tomorrow. NVIDIA's options are too expensive. He didn't do it. And then I was sending him screenshots of my brokerage the next day.
Nice.
Like, I mean, my calls were up like thousands of percents. And I was like, see what you could, I told you. And then, of course, it doesn't usually work like that. That works out, for me, maybe like 1 out of every 5 or whatever, but it's fun again when it does. And I don't treat it any differently than if I were to, make a sports bet with a couple $100. It's
There
basically
you
what
go.
it is.
And
Basically what it
again,
is.
keep that in mind when you're buying options. So
Yeah, I mean,
we've got our guest in the background here. Martha is waiting here, so let's do the intro, run the intro here, and get Martha on here.
Let's do it. Martha Stokes from TechniTrader. Let's give her our pre-market prep welcome and see what Martha's been watching when we come back. Hi, Martha. Welcome back to Benzinga's pre-market prep. How you doing this morning?
I'm doing great. Thank you very much for having me again.
Of course. I see where you're sharing your screen. Let's go ahead and get that pulled up. And what have you been watching?
I have been watching the cycles. I'd like to introduce cycle theory to you. That's my specialty. One of the things that people are talking about is, are we going to go into a recession? Is this going to continue? What's going on? The D-trender takes the trend out of any trend that you have. So if you look at 2018, you see that the cycle is trending down, but the price of the index value of the Dow continues up. This is the Dow 30 on a monthly scale. So our bear cycle started in 2018 and troughed in the 2020. Knowing this, you're going to be able to be aware that a lot of stocks are going to start selling down slightly because of rotation from the buy-side institutions. They're going to start peeling off a lot of inventory that they want to move elsewhere or park, because oftentimes they'll support the market in a bear cycle and they want to have enough cash flow. So you'll start seeing that peeling off. So that cycle is very important. This is a deviated peak. This is my specialty. You don't see it in the chart here on your value scale, but you do see it with the cycle theory, the cycles detrending the actual trend. So we had a deviated peak. It was a double reverberation here that warned us that there was going to be more downside. But as you see, there was a shallower lower high, designating an intermediate term correction, and this trough did complete on that. So now we have a further uptrend, but we also can see that we are bending this curve a little bit because we need to correct because the angle of ascent is too steep. Anytime you have a very steep angle of ascent, that's going to change the NASDAQ. We have no big worries about a major bear market, but we have a market. This is an extreme deviated peak to extreme deviated trough for the NASDAQ. We had a little correction here. It was slower at it coming around than the Dow or the S&P 500. Now it's bending a little bit here, bending a little bit here. We're going to have a correction here, and you gentlemen have been talking about NVIDIA and SMCI and all the others. That's where your correction is coming from. Those stocks are far beyond their fundamental values. The earnings reports, or for the retail side, the fundamental values are what the institution's looking at. They started moving out of some of these stocks a little bit earlier. If we go to Palo Alto and we look at it well, let's look at the monthly. I mean, it's likes and Mikes. I mean, this guy is way over its fundamental values, which are down around here before even reports. That's a warning. You can see the extreme deviated peak on its cycle. It didn't trough properly here, so we can see some correction. What you're trying to learn here is, how do I know when we go into the earnings season what's going to happen? I'm on delayed. This is a student.
Yeah, right.
So I'm delayed. I'm not showing current opening prices here. But if we look at this from a fundamental value, where the heck did the institutions stop investing in this stock as terms of fundamentals? Fundamentals are down here. This is ProTrader pushing. This is a nudge, and they were pushing it up in a little consolidation. This is speculation. This is all trying to drive the price. Smaller funds managers are the reason why these things are collapsing. Small funds managers, small asset management companies with under $3 billion in assets under management are no longer classified as the retail side, as the professional side. They're classified by the SEC as the retail because they don't have to report. And what happens is they use the VWAP order. The VWAP order is the most dangerous order we have in the market, because when you have a selling spree, HFTs gap this stock down. VWAP orders are supposed to act on volume weighted at price. So when you have a huge volume drop, then all of a sudden these VWAP orders start firing off faster and faster and faster, and you just have this huge collapse going on. Meanwhile, the dark bulls are going, where are the fundamentals of Palo Alto right now? Where would we step in to buy? Again, it's not going to be here. they would step in later if they want more, someplace in here. So this is what we look at, what we want to see, and what I try to teach my professional students, because they have to be able to know before the event happens what is most likely the probability, not a prediction, but probability of what's going to happen. You can always have surprise earnings. You can, but yeah, either way. And HFTs have a tendency to not always be accurate in whether they gap it up or gap it down. You have a gap at market open, it's HFTs. They're filling those queues. They're hammering those queues with tons of small lot orders. It causes the stock to have forced the computers of the market to gap it down, and then VWAP orders start firing off and it runs down very fast. That's what you're seeing. NVIDIA, you were talking about.
Bring up NVIDIA. That'd be good to see.
Yeah. Fundamental values were here. They moved up a little bit. And then it went speculative, and there's no more buying going on by the dark pools at all. They're just watching the speculation. There is minimal support here. The question that the fundamentalists have, which are the buy-side institutions, they are the mutual funds, pension funds. They're responsible for the vast wealth of the middle class of America, the largest middle class in the world, and the largest with the largest amount of money in any market. And our foreign funds, a lot of people want to trade the U.S. stock market because it's the largest market in the world. And they just don't have these huge companies that we have. We have massive companies that are great to invest in. But where are the fundamentals? Is it going to be able to sustain? Is it going to be able to hold? Is it going to come in with fundamentals that are going to really make us feel like, okay, this is a price that's worth it? Or is it going to gap down? If it shows a guidance that is even slightly weak, where's the support? There isn't much. And that's what the fundamentals look at, what the buy-side institutions look at, was where are the fundamentals? We could care less about the P/E ratio. That's changing all the time. Who cares? What we care about is where are the true value of the fundamentals. I believe that it has a higher fundamentals, but we'll have to wait and see. I do not see any heavy rotation going on. If I look at my student, there is a peak right here, and that's why it's turning. This indicator is a jewel for retail traders, because before the price moves down, it warns that it's going to move down the next 2 days. If you're a swing trader, a short-term trader, this oscillator is a volume oscillator. I have several oscillators for different various charting software programs. They peak at that final update so that you know that you can sell the next day and get out on your swing trade and get out at close to the high. That's a very important oscillator to have. Most people use price oscillators, and that isn't going to work in this market anymore. You need the volume oscillators, and that's something that I teach. This is flow of funds, showing what's going on there. So we see that beforehand that there's some rotation going out by the professional traders. They're not comfortable swing trading this into its earnings season. So we have a lot of pre-warnings that are going on that a lot of times.
Can I stick with NVIDIA here for a second, Martha? Because
Sure.
Everybody's talking about it, and you're talking about, the fundamental value area. Where is that fundamental value area for you? Like, let's just say NVIDIA disappoints and pulls back significantly. Does that equal a buying opportunity for you? And where would you, be telling your traders to look, at potentially buying this on a pullback?
I think NVIDIA's quarterly for this is going to come in as, pretty close, like you do. I do agree with you thoroughly. I've been listening to your commentary, and I agree with what you're saying. As a long-term investment, I'm not too worried about it. Whether to add more, again, I agree with you that you should wait. It's over-speculated. Its monthly chart is an extremely deviated peak.
Wow.
So I would, as a cycle theorist, I would be looking at that level. If you go back to the daily chart, we're looking back at this fundamental level here. I don't think it's going to go back that far at all, but I do say that there will be no more purchasing by the buy-side institutions until it can prove that it can hold its fundamentals. It's not this quarter they're worried about. Where are we? We're in the second month of the first quarter of this year. That's where they are. They could care less about the fourth quarter. They already knew where that was. They went in buying well ahead of this fourth quarter. They're now looking at the first quarter of this year, and they're saying, okay, what's going to happen? Is it going to be able to hold this? Is it going to go flat on its exponential earnings and revenues? And what is it going to do? They do not have confidence in it right now. That doesn't mean they're selling, they're holding, they're going to hold. but they're going to wait to see before accumulating more. Now, since they're the powerhouse behind all of the sideways action and all of the price movement and that follows the momentum that follows their accumulation, them waiting means that it's going to slow down that price. How far it gaps down depends on how many small and lot investors and your VWAP orders from your small funds and small asset management companies. They're the ones that are going to drive it down. If it drives it down to say here, and there's actually fundamental support here that the institutions have calculated with their quantitative analysis, they will come in and you will see this sudden pop up. Whenever you have a quite accumulation here going on, if the stock ticks down, goes below their fundamental values, they buy and push up. That's a key trigger signal. You have a stock that suddenly runs down and the next day it pops right back up. That's dark pool buy zone. You just struck a dark pool buy zone. That TWAP order triggers and they push it right back up into their zone. If it goes outside of their zone, they stop buying. And then it sells back down into their zone and they keep on buying. This is a very important thing that I try to teach my CMT candidates, my professionals, and my retail traders who've decided they really want to get serious about making some real good money in the market, because this tells you what's going on before it happens. So everybody has been waiting and enjoying the ride and prepared to exit. Some people have exited already. You have two small candles here representing pro traders. They're out of it now. And they're just sitting back and saying, okay, what are the small funds managers going to do to the stock? Are they going to rip it to shreds? Is HFT going to gap it down hugely? Is it going to hold at a decent level, which would be higher right in here? And are we going to end up having a little thing? So they're not in this stock. They're already made their decisions. They're already waiting.
Can we look at a stock that maybe has the opposite story, Tesla, because it's kind of been hated here as of late. It's gone nowhere for the better part of a year, over a year now. It's significantly off of its all-time highs. Can we just look at, obviously your statistics here and talk Tesla?
Tesla, yeah. Well, Tesla is, okay, the biggest problem with Tesla is that the buy-side institutions go and visit each company that they own a huge amount of money in, and they don't really hold a lot. They're holding 43 right now. That's desperately low for a huge, big company. And what the buy-side institutions are saying right now is, we're going to keep selling CEO and board of directors until you get rid of the CEO that you have and get someone in place who will take this big, beautiful company and take it seriously and stop playing games. We have to have a strong CEO in every one of our major corporations. The ones that are going to excel have magnificent CEOs who take their job seriously and really drive that company. So we're looking at this guy, and we're looking at this lack of confidence in the CEO. And that's what you're seeing in this. And you can see it trickling down. We do have an extreme deviated peak to a trough, but the trough is reverberating because they're still selling. They're still slowly rotating, going out. Okay, you want us to reinvest in your company? You get rid of that guy. As soon as that guy is gone, and I know he's very popular by some people, but buy-side institutions don't like him. They don't like the fact that he abandons this company and goes off in pursuit of wild, crazy things. This has support here. And if there's any inference that there's going to be a change of management, then it could do much better than it's going to do. If it doesn't, it's going to sit here in this trading range for a very long period of time. I've seen this before, because what the retail side doesn't realize is that the institutions just have huge clout as investors. They have the buying and selling power. They have the voting power. And right now, they're not happy. If they were happier with this, then this company, if they had a CEO that they felt would really, really drive it, then it would be doing better. We could see that in Microsoft years ago. If we go back in time to the long, boring, sideways.
16 years of consolidation.
16 years. Then you get this magnificent CEO who's been working his way up through all the things. Just a brilliant guy. And look at this baby take off. They were so happy. As soon as he came in, man, they started buying this. And then other people, of course, went in because it just got great products, and it did well during the pandemic, but not overly so. Because it was catering to the small businesses who were struggling to survive the pandemic. The government wasn't helping small companies much, mostly the bigger companies. And so that Azure and all the things that they had for small business, and now they have their AI for small business doing very well. This is a great little company. You can see it's a little overextended on its extreme peak and extreme deviation. It had a perfect cycle pattern, but a soft landing on its price. Excellent. It moved up too quickly. It corrected on its pattern. And so we're going to have another little correction here, but this stock can continue for quite some time. It's like you say, NVIDIA is a long-term investment. Microsoft is a long-term investment because these are just the beginnings of the new technologies. There's going to be all kinds of improvements, enhancements. There's going to be competition. There's going to be people coming in to fix AI, because AI has a lot of problems. So like Microsoft in the early days of the 90s, it was so exciting, and all these bugs and all these problems that you had. And then all of a sudden, all these little niche markets came out, little companies came up to fix all of Microsoft's problem. We're going to have the same thing with AI. So we're going to have this plethora of young new startups fixing the bugs of AI for the larger corporations. Pretty much that's what I feel will happen again. It's already started. If you look at the NASDAQ private equity market, they have all these little companies that they're nurturing and looking after, and they have all this revenue that they're able to help them grow with because they're infusing investment dollars into those companies early. The buy-side institutions are buying pre-IPO on the NASDAQ private market.
Well, we've been on the line with Martha Stokes again from TechniTrader. If you want to check out TechniTrader, we've got that QR code on the screen as well as a link in the description. Martha, this has been so much great information, a perfect preview of NVIDIA's earnings this afternoon. Thank you so much for hopping on with us this morning.
Thank you for having me. Bye-bye.
Thanks, Martha.
All righty, guys. We still have a couple earnings that we did not get to last night. Dennis, let's start with, I mean, we've been talking about the ugly. I guess let's stay on the ugly. Solar Edge, ticker CEDG, trading down now about almost 18% this morning. Let me get you the numbers there. I mean, everything in this space just seems so out of favor.
Solar has just been an epic disaster. But again, ENPH, you know, reported into that and actually popped, and their earnings were just okay. What were these Solar Edge numbers? Give me these numbers, because I'm surprised. You know, I kind of thought the bar was really low here.
Right.
And I thought if they said anything okay, that the stock could actually rally on that. The report didn't look that bad.
Yeah, the report itself wasn't that bad, Dennis. So the GAAP or non-GAAP EPS came in at a loss of 92 cents, which beat estimates by 42 cents. So a pretty sizable beat on EPS there. Slight miss on sales, revenue of $316 million, missed by about $9 million. But here's where the kicker comes in. Sales guidance far below expectations. So not just, you know, a slight, miss on the guidance, but far below the street expectations on guidance. And again, you're seeing the stock get punished this morning. Everything, I mean, I'll pull up the TAN ETF because you can just see how this thing has been trading really all basically this year, and where
just to the downside.
Yeah, or not the past couple of days. I mean, it's just been, oh wait, why is it pulling up NVIDIA's chart?
That's NVIDIA.
Yeah, hold on.
Get that's definitely not the TAN.
TAN. Yeah, I was gonna say, wait, I was just talking about how this thing hasn't participated in the rally, but then it has. But that was NVIDIA. So I mean, if you look at this whole year, where my cursor is the start of this year. January, TAN was at $53. January 2nd when we opened trading. Now it's at 44. So the whole year, growth has really been kind of in favor. I mean, specifically in the semi space, but some of these tech stocks. But solar and these clean energy names have just not participated whatsoever, just seem very out of favor right now.
And they continue to be out of favor because these are all financed plays, meaning they're big ticket items that require financing. And that is just not, you know, the Fed has not given them the environment where they're going to succeed. And if we're higher rates for longer, that still doesn't equal good news for any of the solar companies here. I know First Solar has been okay. It's held on. But we know, you know, when you look at these things, you know, where they were at the all-time highs and where they are now, it coincides perfectly. When we started raising rates, it was the green light to like, let's get out of these plays, because eventually they're going to get hit with just, you know, the rates. And until we start actually seeing the Fed lower rates, it's tough to get long these stocks. I don't have any solar stocks in my long-term portfolio. Would I put them in? I mean, rates have got to start coming down. And again, some of this stuff is just, it's, you do your project analysis there and you're plugging in those financing costs. And when the financing costs are higher, projects get killed like this. It's all about, just doing it. And so that's the issue that they're facing. And it's, not enough that we think rates are going to be going lower. We need rates to go lower. These companies need rates to go lower. So, ENPH has had a lift. But, give a perspective here too. ENPH was a $339 stock, so 122 bucks. So it has been just slaughtered as well. All these other smaller ones, you wonder if they can even stay in business. SunPower, $50 to $3. Sunrun, if you want to just go through them all here, they've all just been disasters. Over $100, it's 15 bucks here now. There's Canadian Solar CSIQ was $67, is 22 bucks. It's just across the board. It's the story of interest rates, and these companies were at ground zero for when they started raising rates.
And to your point too, I mean that these companies need to lower interest rates because they're the ones that are going to borrow money and have to spend all this money. If I wonder if there wasn't as much, and I don't want to get too much into politics, but I don't think the market, like all of us, we don't know who's going to win the 2024 U.S. presidential election. But I'd imagine that, if Biden were like a shoo-in to win, then these companies, it'd probably be seen as, okay, these companies will have an easier time getting loans or getting money should they need it. And then maybe with that uncertainty, it's like, okay, they've got some money flowing in right now, some loans coming in from the DOE to a lot of these clean energy companies. But does that dry up if, Biden doesn't win the election? And so maybe some of that uncertainty too, just okay, if interest rates stay higher and then you don't have a government that's willing to kind of fund these companies if they're in trouble, then that could be a recipe for disaster for some of these solar names.
It's a tough environment here for them. I think there's a turnaround story here eventually, but I mean, give a perspective. The Solar Edge is losing a lot of money right now. It's not like we've got, strong, these companies are still making money. The P's are still low and eventually they're going to turn around. I mean, if the rates stay up here for the foreseeable future, there's the possibility that these companies, they continue to burn cash, could get themselves into some trouble. So it's hard to come in here. It's hard to buy stocks that are losing money.
Yeah, 100%. Let's see. What else did we've got a couple minutes left. Are there any other big earnings last night that we haven't talked about yet, Dennis?
Yeah, there were some good ones. I mean, Teladoc is another disaster,
Oh, yeah.
Kathy disaster. And, every time you think Kathy's just getting it going and she's starting to look like she's turning it around, they pull the rug out from under her again. Well, Teladoc is going to pull the rug out from under ARKK here today because she's got a pile of that. It's one of her biggest holdings. It's down 21% here. Give us the report here, AB.
Yeah, let's go ahead and pull up the news here on Teladoc. We had, so it looks like guidance was disappointing. EPS looks like in the 110 to 80 cent range versus $1.23 estimates. Revenue came in at 2.63 billion, 2.63 to 2.73 billion, below the $2.7 billion estimate. I mean, all these like COVID type plays, like you're talking Zoom, Teladoc, like you mentioned, still some of Kathy's biggest holdings, but I mean, this thing just got crushed after week.
Zoom has been a disaster. She was just the master of chasing everything, buying, growth at all costs, and it just didn't work out. She bought a lot of companies that just weren't very good. She was one trick pony. Tesla was her trick.
This site, Kathy's ARK, it's not from ARKK, but it's someone else's site that they have, because you know how ARK actually sends out its like daily trades. So they track everything on this site. So this is combined with all of Kathy's funds, what her top holdings are. So it's Coinbase still with
She's a huge believer in crypto. She thinks Bitcoin's going to like $1 bazillion.
Yeah. Okay. This is actually interesting because Teladoc definitely used to be in this top 10 here.
Wait, you want to know why it's not there?
Oh, because the market value is
the price keeps falling. Yeah. So she probably hasn't sold the shares. It's just a matter of the price has fallen so far that it's become insignificant almost in her portfolio. But I mean, it was $308 a share. It's $15. Is this a new all-time low? It's getting close to new all-time lows. I believe back in 2016, I don't know if that's when an IPO, that's as far back as my data goes. The low was $14. You're approaching all-time lows for Teladoc.
Oh my God. And look, it's got her cost average right here for Teladoc.
Oh, that's fun. Where's that?
148 to 172.
Not a good one. That's a fun thing just to look at all of her dollar cost out, like how much cash she has burned. Tesla's got to be good though. The Tesla thing has like made her. Where's her Tesla?
Well, now, but I mean, now it's only
Because
so
she
her
keeps buying, because she sold some and bought some.
so
So
it's
it's not as
80,
great as it
85
was.
to 108. So it's like about like an 100% gainer for her for Tesla, but that's by far
Her Coinbase is much higher cost base.
Yeah.
UiPath is
Nah,
much higher
Roku.
cost
I mean,
base.
this Roku one is
She's been
terrible.
so efficient at just burning money. Roku. It's amazing, that she grew as much as she did. And I know we pick on her a lot, but I do believe she's one of the poorest money managers, and who, obviously there's lots of poor money managers, but of that have been talked about and given as much credit as she has been given. I mean, she has massively underperformed the Qs over the course of the ETF. So people get mad when I trash her though, but I mean, I just try to push people away from investing with her because her investments have been so poor.
Yeah, and I've definitely over time, when we were right in that growth cycle after COVID, like 2021, and ARK was, outperforming the Qs. I, maybe got a little swept up to it, like, oh, she's such a visionary. She has all this. And over time, you kind of like, the more I listen to her talk and like read some of the reports, I'm just like, I question really everything she says now in terms of
question it all.
Yeah, I mean,
a lot of it is nonsense.
Yeah, whether you're talking about her Bitcoin price targets or what she says about Tesla, this or that. I mean, I don't know. It's just hard, I think, to really, not take what she's saying with a grain of salt at this point.
So, okay, we picked on Kathy enough here.
Yeah.
Sorry, Kathy Wood, we love you. Other stocks that reported last night. There was a lot of reports here, but again, we're into mid-cap season here. So, you got the Solar Edges, the Teladocs, Wingstop, which has been going, and they're let's look at this one, because this one is a Momo trade too. And this one has just wickedly been going up nonstop, WING. And the earnings were good here too. The 64 cents versus 57 cents, 127 million versus 119 million in sales. It's a small company. I mean, you're talking, is that right? Is that only 100 million in sales? I got to go look at the market cap of Wingstop.
Yeah,
I didn't realize the company's that small.
Yeah,
it's only a $9 billion company. So it's still a small company, but it's been going and going and going. Just be careful. Just as much as I said with Lilly yesterday, when Lilly was at the highs at 390, I was like, the Momo trade is coming off here right now. So I'm like, I would be cautious, chasing Lilly up here. Obviously, Lilly has sold off significantly in just one day because the Momo trade's coming off. This Wingstop's been all Momo too. So the earnings were good, but I'd be very cautious buying this dip on this thing, because this thing has just been rip-roaring 200 to 330, overbought, and they're selling that kind of stuff right now. So the earnings were fine, but they're selling those kind of stocks. I'd be careful chasing this thing right now. I actually think Wingstop, even though the report was good, I just think that they're not buying Momo here, at least this morning. So I'd be very careful chasing Wingstop.
This thing seems
here.
really,
and that's my words to say that I think the stock could actually go down.
Yeah, I mean, this thing's really expensive. I mean, like you said, 127 million in sales. So if you do that times 4, about $500 million a year, and it's trading at almost $10 billion market cap. So, and I mean, with stuff like this, with Wingstop, with foods, Shake Shack did also report a few days ago, and those numbers were good. But to me, there's just such a ceiling. There's a cap on how much growth you can have, right? I mean, like, how many chicken wings can you really sell in a year? How many new locations can Wingstop really open? So even if the numbers continue to be good, you're not going to see the type of growth that I'm looking for in long-term positions, because you just physically can't sell that many chicken wings.
And I mean, they've been growing revenue at 26% year over year, so they are growing significantly. The PE on this thing is 111. That's the forward PE. So they're projecting that out, 111. So it is priced for perfection, and the report was just fine. It wasn't, blowing it away. I honestly think like this stock could be sub 300.
I will. Okay, so James makes a good point, because there are food stocks out there that are exceptions to that, and you're looking at, Chipotle and Domino's Pizza have been like big winners where they actually have
grown.
Yeah, they've had this like, really great growth. But I think if you look at all the different publicly traded food companies out there, I could probably make a basket of like 25 and 30, and only 3 of them, fit that bill of, okay, you've actually seen this growth.
Exponential growth.
Yeah, the exponential growth that you can almost relate it to what you would see out of a tech stock with Domino's Pizza or Chipotle, whereas those are outliers, typically. And I think a lot of people, now that they've seen Chipotle, they're looking for, Kava can be the next Chipotle. Oh, Wingstop can be the next Chipotle. Well, not everything can be Chipotle, right?
I want to give you some perspective here too. Think about how big Domino's Pizza is. Domino's Pizza is everywhere. And we've talked about the story of how Domino's Pizza and everybody wants to be. Do you know what the Domino's Pizza market cap is?
I'll guess.
Yes.
15 billion.
Yeah, it's only 14 billion.
Oh, that was good. That was a good game.
So, but think about that. Domino's has already executed and grown like that. Wingstop is a market cap of 9.5 billion. So you are like only, you're 2/3 of the size and market cap of Domino's Pizza. But I pretty much guarantee you, Wingstop is not even close to the size, with the number of stores that they have of Domino's Pizza. So just consider that. Not every story is going to be like Chipotle, and Chipotle's market cap is immense. Chipotle has executed like nobody else since the E. coli stuff. PE is still 48 on it. It's not cheap. It's got a $70 billion market cap. But I think your comparisons to more like Domino's Pizza as opposed to Chipotle, because people want to say Wingstop is the next Chipotle. I don't know if that's the case. Maybe it is. Maybe they're that good, and maybe it's going to be, $70 billion company. But, the market cap here, for most restaurants, the good ones is 10, 15 billion. Yeah, that's where it's
Wingstop's
at.
Already there.
A lot of the growth has already happened here in the stock price. So that's my argument, is that it's got to really execute, and it's got to start separating itself to look like the next Chipotle, or otherwise you are buying a bubble on Wingstop.
This conversation is making me a little hungry, but do you remember?
I'm hungry too.
Do you remember at one point when people were saying Domino's, it's not like a pizza play, it's a tech play?
Yeah, that was Kramer always saying that. Domino's Pizza is a technology play.
Yeah, but either way, at one point, to Domino's credit, if you look at the price action from, say, like 2012 to 2022, those 10 years, Domino's actually outperformed like Apple in that 10 years, NVIDIA, Tesla, Netflix, whatever stock you want to look at. Domino's at one point was like the best performing stock in that 10-year period. So you got to give credit where credit's due. But again, to your point, Dennis, like, what I want to buy Wingstop when its valuation is basically only slightly lower than Domino's. And I personally think Domino's is a lot bigger and probably still has some more growth to go compared to Wingstop. So I don't know.
They're saying in the chat that there's 1,900 Wingstops, so there's a lot of Wingstops. But I would argue that I'm just looking at the fundamental numbers here. PEs, I've never made a lot of money buying a PE on a restaurant of 111. So they better keep growing like crazy. They better be growing like, nobody's business to justify a PE of 111. I'll leave it at that.
And yeah, and I was going to say, look, like to the people in the chat singing Wingstop's praises, I might be completely wrong on Wingstop. And we're we're talking about this as like it's a Chipotle in a year or two or whatever. I'm just saying, if I had to pick, would I put Wingstop in more the camp of Chipotle and Domino's, or the camp of all these other food stocks like Wendy's, Shake Shack, etc., that haven't really done that much? I would probably put it in the latter. And again, I reserve my right to be wrong, because I've been wrong before, and I'll be wrong again.
And Paul making a good point. Domino's Pizza 10 times the revenue of Wingstop, yet only has a 30% higher market cap. So Wingstop better be growing. Because that is lofty valuations. You talk about NVIDIA being overvalued at 35 times earnings. You're paying 111 times earnings for a restaurant. Well, that's expensive.
Yeah, and like, all right, yeah, like if you have those multiples, you better have the growth to back it up. I'm from the show me state, so now it's time to show me for NVIDIA. Like, if you're gonna, you got to justify those valuations and those multiples. Tonight's the night to do it. So again, all eyes will be on NVIDIA. We will be streaming that earnings call here on our channel at Benzinga. So when the time comes at 4:30, you want to tune in. Make sure to come back here. Subscribe if you have not already. We got Joel coming back tomorrow. I'm gonna trade places with Joel. I don't think I'll be here, Dennis, but you'll be in good hands. Good. So, you're gonna be gone. Yeah, for the next 2 days. Okay, so Joel, we got coming back. We've got NVIDIA earnings to digest, and not only NVIDIA. There's a lot of companies reporting earnings tonight. Here, I'll just give you a few other names. Rivian. None of these companies are going to get much airtime because it's all going to be talked about NVIDIA, but there are some big ones. Etsy is going to report. We got the Cheesecake Factory. Bros. Old Money Mitch has picked. Dutch Bros is going to be reporting. We've got more food stocks, making me more hungry. Yeah, there you go. Bally's, CWH, Lucid's going to report tomorrow. We're going to get Square and Booking and Intuit.
We're going to get Wayfair and Moderna is going to report. Carvana is going to report. So we got some more exciting reports coming as well.
Oh, man.
But NVIDIA is going to be whatever.
I wish I was going to be here tomorrow morning. We're going to have so much to talk about. But real quick, we're going to wrap up. Rivian, I mean, what is your, like, 20-second take? You think the company's going to make it? I mean, I feel like
I am still a fan of Rivian.
Okay.
Not the stock as much. And I've said this before. There's going to be a time to buy Rivian stock. I don't think Rivian is a zero. I think it's going to be a player in EV. I think they make amazing vehicles here. It's just a matter of maybe now is not the time. You know, we still have higher interest rates here. Maybe when they actually start lowering interest rates, we look at this one. But, you know, the market cap's 15 billion. Could it be a Tesla? Well, it's not going to be Tesla. But could it be, you know, number 2 in EV, especially when the other automakers are now moving more to hybrid and not pure EV? I think that's good news for Rivian. I'd love to see Rivian, and I don't know when they're projected to turn profits here. It may be a very long time away. But, you know, it's come down a long ways. And I do think that, you know, there's going to be huge growth here. I actually like Rivian long term, but it's hard here just because the company still loses money.
100%. I think basically if the company can withstand this cycle of higher interest rates.
This is the cycle. It's got to withstand.
Yeah, if it can just withstand this and then we get to those cuts eventually, then Rivian will be a little bit further along in its production and everything. I think it'll be fine, but you got to survive. Basically, just hold on, survive. It's like a fighter, like that, you know, just make it through this round and then we'll be good. All right. So, but as long as it doesn't get knocked out and get TK'd before the end of, you know, when the bell rings, then I think we'll be okay. So I'm 100% with you there. Not in it now, but I think there will be a time to buy it. But all right, guys. Thanks again for tuning in to Pre-Market Prep this morning. We'll be back tomorrow morning. Until then, stay green and good luck if you're trading NVIDIA's earnings.